Welcome, Mindsetters, to this grade 12 session doing accounting. Guys, I hope you guys are ready. You got your pens and pads out and you guys are about to make some notes because I've got the lovely Mahesh here who's going to be taking us through what's happening today. What are we going to be doing today?
Thanks, Ty. Welcome, everyone. Welcome to all the accounting learners. Today, we're going to be focusing on cash flow statements. We're also going to be looking at some notes on the cash flow statement. And guys, Ty just reminded you to have your pens and pads ready. Take out those calculators as well. Back to you.
All right, so while Mahesh makes her way to the board, I'm going to tell you guys what you need to do. Because guys, today, much like yesterday, is very, very important. Because you guys need to pay attention. Because guys, you're not going to be chatting to us mainly on the Facebook page. You guys have to go to the events page. Because there is one for today's session, Tuesday. Make sure you guys go on the events page because that is where the challenge question will be posted. And guys, you must enter so you can get all these awesome books and there's CD hampers to give away. So guys, I'm trying to get all the stuff off my hands. So make sure you go to the events page. And today's challenge question is, if you can see when it pops up on our screen, what is going to be the challenge question is the asset test ratio. A, current assets minus inventory in ratio to current liabilities, or B, current assets in ratio to current liabilities, or C, total assets in ratio to total liabilities. So guys, make sure you get that down, and remember, you have to post the code. The code is there, 3907. Make sure you post that code, and guys, you can SMS, you can hit me up on pep text, and guys, this stuff is for you, it's for free. Get on the page and get chatting. Remember, the number is 083 44 88810. That's the SMS line. And guys, you guys can also enter by emailing win@learnextra. Remember, win@learnextra.co.za. So guys, this stuff is for you. I'm trying to get it off my hands. So hey, if you don't enter, I don't know. I'm just trying to say. I'm just putting it out there. But anyway, I'm going to hand over to Mahesh because she has the rest of the session to do.
Okay. Thanks, Ty. Guys, let's not waste any time. Let's start straight with this cash flow question. So let's go to our question. Very quickly, I'm just going to go through the question with you so you know exactly what we're going to be working on. The required, complete the note, cash generated from operations for 15 marks. Then we're going to be looking at calculate the cost of new equipment. Let's just get a pen out there quickly. Calculate the cost of new equipment purchased for 5 marks. Next question, 1.3. Use the information below to prepare the cash flow statement. Let's just get the pen out again, guys. To prepare the cash flow statement for the year ended 28th Feb 2011. Now guys, when we go to the answer sheet, you're going to notice that the cash flow statement is already completed. I will, however, focus on certain calculations. Then the last question that I'm going to touch on, refer to question 1.1. Provide a reason why the following items are adjusted when completing the above note. For 2 marks, so you're going to have to explain why we make an adjustment for depreciation, and then for another 2 marks, why do we make an adjustment for interest paid? Right, guys, let's look at the rest of the question, rather the information for the question itself. The following information was extracted from the income statement. So it's an extract of the income statement and notes on the 28th of Feb 2011. So they're giving us from our income statement dividends paid and declared for the year. In other words, our ordinary share dividends for the year. Then we've got income tax, which is given to us, interest on loan given to us, and then depreciation on equipment, which is given to us. Now, immediately, guys, you would notice that there is no net profit before tax. And if you did watch earlier, Pradeep did mention that when you are not given net profit before tax, you need to draw up which T account? Absolutely correct, the appropriation T account. So we're going to have to draw up appropriation T account to work out the net profit before tax. Right, let's move on. As expected, we've got an extract from the balance sheet, again, at the end of the financial year, 28th Feb 2011. Guys, I'm not going to go through the entire extract, but we know for now that that info has been given to us. And then, if we move on, additional information, like with every cash flow question, we've got additional info 1. Tangible assets consist of property and equipment, so there's obviously no vehicles here. Additional property consisting of 93,750 Rand was purchased during the 2011 financial year. And then we've got equipment costing 10,700 Rand was sold at carrying value. Right, guys, when we read this, we notice at carrying value, but the amount is obviously, let's just fix that, not given to us. The accumulated depreciation on the equipment sold was 7,000 Rand, and then new equipment was also purchased during the year, and again, it's not given to us. Next bit of additional info, we've got trade and other receivables that is given to us, and then, guys, trade and other payables. Right, we've gone through the entire question. Now we're ready to begin with our very first question. So let's just get out that answer sheet. And guys, please remember, text, type, find out if there's any calculation that you're not sure of. Remember, we're here to help. Right, we're ready now to start with note number 1, cash generated from operations. And we need to start with profit before tax. Right, guys, profit before tax, yes, it is my net profit before tax, and I've already mentioned that this amount was not given to me. So I need to now reconstruct my appropriation T account. So let's do that, and what I'm going to do is I'm going to just extend the page so that we can draw up this appropriation account. There we go. Get the pen out. Okay, there we go with green. Okay, appropriation. All right, appropriation account is my owner's equity, minus on the debit side, plus on the credit side. Let's quickly reconstruct this account, and then we start filling in our figures. On the credit side is my profit and loss amount, and remember, this is my net profit before tax. This is my unknown that I want to calculate. What also appears on the credit side is your retained, let's just go there, my retained income. Ty, I think this pen doesn't really like me. That's fine, got it to work. All right, my retained income at the beginning of the year. What goes onto the debit side, guys? How do I appropriate this profit? I appropriate it by sharing or giving away some to SARS, the tax man. Don't we hate that, Ty? Yeah. Giving money to SARS.
Every time. He gets me every time.
Yeah, so remember, SARS on the debit side, income tax for the year. What else goes on the debit side, guys? Exactly, the owners need to receive something. So my ordinary share dividends, and then whatever profit is left over, in other words, not appropriated, remains, and this gets transferred to my retained income. Right, guys, let's now fill in these amounts. So we're going back to our question so that we can extract these amounts from the question itself. So let's find the question. There we go. And we're looking at our income statement. So there's my income statement. Right, so I've got income tax, 75,000. So the amount, people, given to me. There's my 75,000. And my dividends paid and declared for the year. In other words, my ordinary share dividends is an amount of 20,000. There's my amount there. So let's take that through back to our appropriation account. So my ordinary share dividends was 20,000. And then my income tax, people, an amount of 75,000. Okay, let's just double check that. Yep, it was 75,000. Right, next amount that I need is my retained income at the beginning of the year, my retained income at the end of the year, and for that I need to go to my balance sheet. So my extract from the balance sheet, so let's quickly scroll down. I've got ordinary share capital given to me. I've got share premium given to me, I don't need that. And there's my distributable reserves. Now remember guys, this is my retained income. It's just a change of name, calling it something different. So instead of calling him Ty, I could call you T.
That's
Will that
a
be
variation.
cool for you?
Yeah, no problem.
Okay, so similarly, people, instead of calling it retained income, in this question, they're calling it distributable reserves. Okay, you all with me? So that's the amount that I'm looking for. So let's just get that pen out again. 2010, my profit was 75,000. Sorry, not 75, but 35,000. And then 2011, 37,500. So let's take these amounts through. Ty, can I just ask you to remember the amount 35,000 for me? Can you do that?
I can
okay,
do that.
35,000 and then 37,500 is what I need to remember. Okay, so let's fill our amounts in. So retained income, Ty?
35,000.
35,000, brilliant. Okay. 35,000, and then the amount that I'm supposed to remember, which I actually don't remember anymore.
37,000.
37,500, thank you. Right, and now we're ready, people, to calculate the amount that we actually wanted to calculate, my profit and loss amount, or my net profit before tax. So let's get those calculators out. Okay, there's my calculator, so I'm adding whatever I've got on the debit side minus whatever I've got on the credit side. So let's do that. 75,000 plus 20,000. And then I'm adding on 37,500. And then I am subtracting the amount that I had on the credit side, which was an amount of 35,000. To give me my profit and loss amount, an amount of 435,000. Okay, right. Some reason, guys, I feel I made a mistake. I know I've made a mistake here. I'm just going to do that calculation one more time, people. So I've got 75,000, and then I'm adding on 20,000. I am then adding on 37,500, and then I'm subtracting 35,000 to give me my net profit before tax, and this looks a bit more realistic, 97,500. So let's take that amount through. Okay, so it was an amount of, Ty, I just feel I'm doing something wrong here. Sure, I'll pick it up just now, if I am. Okay. Okay, so let's just get that amount back. It is an amount of 97,500.
Because Mahesh, do you think you might want to take a quick ad break, maybe just check it out?
Yeah, I think we should. I think let's just take a quick ad break. You don't have anything from the viewers of me making a slight bit of a hiccup here? It looks absolutely right.
I think no one's picked it up yet,
Okay.
but we'll fix it during the ad break. So
Okay,
I'm going to tell
brilliant.
these guys to make sure, guys, I see you guys posting on the Facebook page. Make sure if you've got an answer, you go to the events page and make sure you post under the actual question for you to enter the competition. And guys, make sure you look out during the ad breaks because the question is going to be in there as well. But for now, we're going to take a quick ad break and we're going to see you after this. Welcome back, Mindsetters. I hope you had a nice little break. You went to do whatever you had to do. You went to go get water, all that kind of stuff, so you don't have to fidget or go anywhere. And I see, Safwan, you're paying attention. I see you. Good stuff. Always good to see that you guys are on the ball and making sure that you guys are watching. And guys, I repeat again, if you guys want to win these awesome prizes for the challenge question, make sure you go to the Winter School events page, looking under Tuesday, which is today's day, and make sure you post under the actual challenge challenge question for you to win these awesome prizes, CD hampers, and these awesome study guidebooks. So guys, make sure you get there. And also, guys, make sure you also post on PepTex. It's free. So hey, I don't know. I would enter if I was able to, but as presenters, we just can't do such things. But anyway, I'm going to hand back to Mahesh. Mahesh, take it away.
Okay, brilliant. Who is it? Safwan.
Safwan.
Safwan. Okay, brilliant. Yes, we've picked up the error. Let me just show the rest of you where the error was. Guys, if we go back to the question, remember we were looking at distributable reserves. And yes, by mistake, instead of taking the amounts below, which obviously was my distributable reserves, I ended up taking the amount above, and that's the mistake that I've obviously made. Right, so we fixed that. It was 57,000. Let's just get that pen out again. It was 57,000 for 2010, and then 99,750 for 2011. So let's go back to our answer sheet quickly. There we go. So our correct profit and loss amount, guys, was an amount of 137,750. Okay, so there's the amount that I can now take to my note. So let's do that. Let's take this amount up to our note right at the top. Okay, let's just get our pens out again. For some reason, this pen really doesn't like me, guys. Okay, so the amount at the top is 137,750. Okay, brilliant. Then back to the note, I need to make an adjustment for the following items: depreciation, which I need to add back, and then I need to make an adjustment for interest paid, which I also need to add on. Okay, I've already recorded the amounts for you because we don't have to do any calculations. Remember, people, I'm getting this from my income statement, the extract of the income statement. So depreciation, an amount of 31,250 is being added back, and then interest paid, 25,000, is also being added back. So let's do that. Let's get the calculator out again, and let's add on these amounts. Let's just move this a bit so we can add. Okay, so I'm adding 1,377.50. Oh, made a mistake there. 50, and I'm adding on 31,250. Okay, too many twos there. 50, and then plus 25,000 to give me my operating profit before changes to working capital, 194,000. So let's write that in. And let me make sure I'm writing it in the correct place, an amount of 194,000. Okay, easy, simple, guys. Let's now look at our changes to working capital. Remember, for changes to working capital, you are focusing on the following items: inventory, then I need to look at my debtors, and then finally, I need to look at my creditors. All I'm asking is, was there an increase or decrease in these items, and what was the effect that it had on cash flow? Remember, guys, inflow, money coming into the bank account. Outflow, we don't really like that. Money is leaving our bank account. So let's start with inventories. So we're going back to our question, and we are looking at our balance sheet items. Just get the pen out there. Balance sheet. There we go. Inventories. There's my inventories. And let's make sure that I've got the correct amount this time. So my inventories, an amount for 2011, 72,500. And then 2010, it's an amount of 13750. Okay. Right, guys, if I compare 2010 to 2011, can you see there's been a decrease in inventories? Decrease in inventories meaning that the business has bought less stock. In other words, not much money was spent on stock, hence it's considered to be an inflow of cash. Money stayed in your bank account, and remember, inflow of cash is obviously a positive effect on that cash flow statement. So let's calculate that increase, sorry, not increase, but the decrease in inventory. So let's get the calculator out again. Okay, so it was 103,750, and I'm now subtracting 72,500. So there's been a decrease in inventory of 31,250. Okay, Ty, another amount for you to remember.
Okay.
31,250. Okay, so let's take that amount through. Okay, back to our pen. So inventory, there's been a decrease in inventory. And remember, people, you've got to show you're working out in brackets. Ty, that amount, please.
31,000.
31,000. Oh, okay, let's get the pen back. 31,000.
250.
250. Brilliant. Okay, next item, we're now looking at the change in my debtors. And again, back to my extract for my balance sheet. So let's find the question. Okay, so in my extract for the balance sheet, there's nothing on debtors. Aha, there's my trade and other receivables, but I did have additional info, so let's find that bit of info. There we go. Let's get those pens out again. Trade and other receivables, and there's my trade debtors. Remember, people, SARS is not included in this calculation. We're only looking at our debtors. So if I inspect my debtors, 2010, it was sitting at 34,000. 2011, there's been an increase in my debtors of 40,000. In other words, I'm allowing more people to buy on credit. Now remember, guys, if you're going to allow people to buy on credit, it means, hang on, money's not going into that bank account. So it is considered to be an outflow of cash. So that outflow of cash would be the difference between the two. We don't need our calculators for this. I'm simply subtracting, guys, 40,000 minus 34,000 to get my 6,000. So let's enter that. There's been an increase. There we go. So there's been an increase in debtors. Again, you're going to show us bracket work, an amount of 6,000, and I've already explained this is considered to be an outflow of cash. Right, final item for us to look at is our creditors. So again, people, back to the question. Creditors, there we go. There's our trade and other payables. And let's get the pen out again. There's our trade creditors. 2010, our creditors are sitting at 141,250. 2011, we're now owing our creditors 43,750, which obviously means there's been a drop, there's been a decrease. Now, when do you owe people less money? Ty, when will you owe, for example, Edgar's less money? When I make a payment. When
yes.
I make a payment to my creditors. It's fine. It's fine. Right, so when I make a payment, so there's obviously been a payment made. You've paid your creditors much more in the 2011 financial year, which represents an outflow of cash. Money would obviously then leave the business's bank account. So let's calculate that outflow of cash. Again, get our calculators out. So we're taking 141,250, and then we are subtracting, let's just move this a bit, we are subtracting 43,750 to get an amount of 97,500, representing again, guys, an outflow of cash. So 97,000, let's get that amount again, 97,500. Okay. Okay, so let's just change that. So there's been a decrease in creditors, and the amount was 97,500. 500. And remember, people, this needs to be in brackets. Right, guys? We've come to the end of note 1, which is now which is a matter of just taking your calculator and calculating that final amount, your cash generated from operations. People, I'm not going to do that for you because it's really straightforward. Let's just go through the procedure. All I'm doing is taking my 194,000. I am then going to add 31,250. Whatever is in brackets needs to be subtracted, and I will then end up with my cash generated from operations. If we do this, guys, we're going to end up with an amount of, okay, you guys can do that at home. I'm sure you can. Okay. Straightforward. Just punching in figures on your calculator.
You should do that. that should be manageable by these mindset.
It should. It should. Right, guys, let's move on now to the next part of the question. Okay, let's find that. Right, the next part of the question's not up, but I'm going to just quickly go through it. It's to calculate the equipment that was purchased. Let's just write it at the top there for you. We are calculating the equipment or the additional equipment that was purchased. Right, guys, for this, I obviously need to look at my question as well as additional information, so the information from the balance sheet together with additional info. So let's get straight to it. Extract from the balance sheet. Okay, so we've got tangible assets. Okay, there we go, tangible assets at book value. And then, let's just make sure I'm circling the correct figures. 2011, that was my tangible assets. And then 2010, my tangible assets. Remember, guys, 2010, I'm just going to write down, this is my opening balance. Okay, OB people, opening balance. And then 2011, this would be my closing balance. Right, let's go to your additional info on tangible assets. It was the very first bit of information. Just going to get the pen out again. So my tangible assets consist of property and equipment. Additional property costing 93,750 was purchased during the 2011 financial year. Equipment costing 10,700 Rand was sold at carrying value. Then they go on to give you the accumulated depreciation on the equipment sold was 7,000. And then finally, what we're interested in, new equipment was also purchased during the year. Right, guys? Something that is very commonly asked in your exam, especially when you have a question on cash flows, the purchase of tangible assets. So let's do this calculation. So let's go back to our answer sheet. And in order for me to do this calculation, I am going to make use of, again, a T account, a ledger account. A ledger account that some of you might not be familiar with, but I promise you, it's something that works all the time, something that if you use, I promise you're going to get this correct in your exams. So I'm going to call this T account tangible assets. Okay, tangible assets. It is obviously an asset, so A above. On the debit side, people, I'm putting a plus sign. On the credit side, I'm putting a minus sign. Let's start with my brought down balance at the beginning of the year. Brought down, so let's go to your extract immediately at the beginning of the year. Let's go there. Ty, how are we doing with any questions so far? Do we have any?
So far, everyone seems to be happy and following along.
Are
so
they?
We're
Okay,
good to go.
brilliant. Great stuff. Okay, so beginning of the year, my tangible assets, 275,000. So guys, let's just take that through. 275,000. So that's my brought down. Then my carried down, I'm going to put this right at the bottom, carried down at the end of the year. What are my tangible assets worth? So end of the year, 2011, my tangible assets are worth 352,500. Ty, are you going to remember that amount for me?
32,000.
352,500. Okay, so let's go back to the answer sheet. 3.
5.
Oh, this pen. I always have a problem with it. 352.
500.
500. Okay, so we've got our brought down, we've got our carried down. Now, people, what's going to make your tangible assets increase? In other words, when will you have more tangible assets? Whenever you buy. So if, for example, I've got one desk and I decide to buy another desk, my tangible assets are going to increase. So every time I purchase, my tangible assets go up. I will obviously own more of that particular asset. Now remember, that's what we're trying to calculate. What was the purchase of your equipment? People, I hope you can see this. That should be an E, purchase of equipment. So this is what I obviously am trying to calculate. Okay, let's just put an X there. That's what I'm trying to calculate. Right, let's now go to our additional info and let's look at the purchase that we made of land and buildings. So back to the question, and we need additional info. So during the year, additional property consisting 93,750 was purchased. Again, my tangible asset value would increase with this purchase. So let's take that amount through. It's 93,750. So 93. There we go, 93,750. Right, now we get to what's going to make your tangible asset value decrease. In other words, what makes this value go down? Every time you provide depreciation, the value of your assets diminish, it decreases. So the first thing that's going to make it go down will be depreciation. Okay, so let's now go to our depreciation. We came across this amount in our question, and it was in the income statement extract. There we go. Depreciation on equipment, 31,250. So let's take that through. Okay, so depreciation, an amount of 31,250. And then, what else makes your tangible asset value drop, people? Think about it. If I've got old equipment, I've got an old laptop, I'm not using it anymore. I'm obviously going to sell it. I'm going to get rid of it. I'm going to donate it, whatever the case may be. So every time you dispose of an asset, your tangible asset value is going to drop. It's going to decrease. So let's now go back to the question, because we did dispose of equipment during the financial year. Let's find that info. There we go. Equipment, so I'm going to get out my pen again. Equipment consisting of 10,700 Rand was sold at carrying value. The accumulated depreciation on the equipment sold was 7,000. Right, now remember, people, it's sold at carrying value. Tangible asset in the balance sheet is shown at carrying value. So the first thing that we need to do is calculate what was that carrying value of your equipment that you sold. So I'm going to do the calculation above. In order for me to calculate carrying value, I'm taking my cost minus my accumulated depreciation, and that would give me the carrying value. So let's now look at your cost. Equipment costing 10,700 minus accumulated depreciation thus far was 7,000. So if I subtract 10,700 minus 7,000, my carrying value, this equipment, people, is worth 3,700. Okay, so let's take this figure through to that T account. We're almost done with that T account. So back to my answer sheet. So my asset disposal, let's get the pen out. Oh. There we go. Asset disposal, an amount of 3,700. Right, I filled in everything that I needed to in terms of the T account. Now, all I've got to do is calculate what was the additional equipment value that I purchased. So let's get those calculators out. Before I do that, just very quickly, people, all I am doing is I am adding whatever I've got on the credit side. Why on the credit side? Because the credit side, I've got all my known values. On the debit side is my unknown. So I'm going to add up whatever I've got on the credit side minus whatever I've got on the debit side, and that moved, but that's fine. And I can now work out my X. So let's get our calculators out quickly. Okay, so on the debit side, I've got 31. Okay, Ty, I'm just having a bit of a problem here with the calculator. While I'm fixing that, maybe you can remind our viewers about the competition one more time.
Okay, so yes, guys, make sure you get on the page. I'm seeing a lot of you entering, and I'm loving what I'm seeing. So guys, keep on posting. And remember, you can post as many times as you want. Guys, you can go onto pep text, you can go onto email, you can go via the Facebook page, you can SMS. So guys, do not stop posting. But you know what? Actually, I think we should just take a quick break, huh, Mahesh?
Yeah.
Okay,
Let's
so guys,
take a break.
while we're taking a quick break, do not go anywhere. Make sure you stay tuned, and we'll see you after this.
Okay.
Welcome back, Mindsetters. I hope you had a nice little break. You did whatever you have to do, like I always say, but make sure that you are paying attention now. Because guys, before you forget again, make sure you get onto the page, the events page, and look for today's date, and make sure you post under the actual challenge question. Make sure, and don't forget to put the code next to your name, otherwise you're not eligible. So guys, make sure you keep posting, then you can win these awesome prizes like these CD hampers and these awesome books. So guys, we can have these sent to you, just have to enter. So don't forget, events page, right? And then you can also enter on win@learnextra.co.za. You can email that address, and also don't forget to go to pep text. It's for free, so you guys can enter there as well. And SMS, write this number down: 08344888810. I'm gonna say that again: 08344888810, and SMS, and you guys could win these awesome prizes. So guys, don't forget. Keep entering. But right now, I'm going to keep quiet so Mahesh can continue the lesson. Mahesh, take it away.
Okay, thanks, Ty. Guys, before we had a break, we were looking at the calculation for the additional equipment that was purchased. Remember, people, all it was taking out our calculators, adding up whatever we had on the credit side minus whatever we've got on the debit side for us to then calculate our amount that we wanted. The additional equipment that was purchased, 18,700, and then we take this amount straight through to our cash flow statement. Right, guys, the next question was the actual cash flow statement itself. I am not going to do the cash flow statement with you guys because it's something that is going to take a lot of time. We don't have that much of time. I want to now move on to question 1.4. So let's go to 1.4. Let's find the question, not the answer sheet. 1.4, let's just find that quickly. Okay, there we go. Right, question 1.4 wants us to refer to question 1.1. That was where we completed the cash generated from operations note. Provide a reason, people, just one reason why the following items are adjusted when completing the above note. Firstly, depreciation, and then interest paid. Right, let's start with depreciation. Let's talk about depreciation. Now remember, people, depreciation is a non-cash item. In other words, it is an expense. It reduces our profit, but money does not physically leave the business's bank account. And remember, when you're doing a cash flow statement, you are interested in items that affect cash flow. In other words, was money going into your bank account? Was there an inflow of cash? Or was money leaving your bank account? Was there an outflow of cash? In the case of depreciation, nothing happened. It's a simple expense. It reduced profit, but money did not physically leave your bank account, and therefore it is added back to your net profit before tax. So the reason that you should give in your exam, if you are asked this question, depreciation is a non-cash item. Okay, you guys with me? Right, let's now look at the next item, which is, I promise you there's gremlins in the studio. Okay, for some reason the calculator is not moving, but let's just carry on. It's fine.
So.
Yeah.
Right.
When we look at interest paid is disclosed separately on the face of the cash flow statement. So yes, interest paid is an expense and it is a payment of cash. It is an outflow of cash. But interest paid is a special item. It needs to be shown on the actual cash flow statement itself, not in a note, but rather on the face of the cash flow statement, and hence we make an adjustment for interest paid. I'm going to quickly go to the cash flow statement, people, and just show you exactly what I'm talking about. There we go, interest paid. Okay, so interest pay, there we go, right at the top. So we're looking at the cash flow statement, and interest paid has its own place in the cash flow statement, disclosed separately on the face of the cash flow statement. So that's the answer that you should give the examiner. It is disclosed separately on the face of the cash flow statement. And I know I've repeated that now twice, thrice maybe, but the more I repeat, the more it's going to stay in.
Exactly,
Yeah.
no.
Okay. Right, guys, we've actually come to the end of the question itself, but I just want to quickly touch on the cash flow statement, the actual statement. Please remember, format, absolutely important. You need to make sure that you know the format of the cash flow statement. If I quickly look at the format, there's my cash generated from operating activities at the top. Then the next main heading, cash generated from investing activities. And then finally, I've got cash generated from financing activities, which then allows me to calculate my net change in cash and cash equivalent. Okay, lots and lots of marks for a cash flow statement, Ty. It's one of those questions in the exams that if you hit the nail on the correct spot,
Easy
then
marks.
Easy marks, I promise
Always,
you.
always good to have easy marks.
Yeah. Okay, I'm going to hand over to you. Do we have any questions? Any?
So far on the page, no. I think everyone has been following pretty closely.
Okay.
So I think we're good for an ad break.
Okay, brilliant. Yeah.
So
let's go
guys,
for a break.
do not go anywhere. Make sure you guys keep entering. This stuff is for you. Guys, I'm giving this away. I need to get rid of the stuff, so make sure you keep entering. And guys, don't forget, the competition question is also going to be popping up in the ad breaks. So make sure you watch out for that and post, email us, SMS us. Guys, this stuff is for you. It's up for grabs. And guys, also just a quick note. When we come back, Martin is going to be in and he's going to be taking us for the rest of the session. So guys, do not go anywhere. We're going to see you after this break. Welcome back, Mindsetters. I hope you had a nice little break. And as I say, you always do whatever you have to go do. Go to the bathroom, whatever you need to do, get snacks, whatever you need to do so you guys can pay attention. And guys, make sure you go and onto the events page and enter, SMS us, email us, win at Learn Extra, SMS us on 08344888810. And guys, you can win these awesome hampers and this awesome t-shirt that I'm wearing so you can be matching with us presenters. But right now, I'm actually going to hand this over to Martin, who's just stepped in, who's going to take us for the rest of the session. So guys, make sure you pay attention, né? All right, sharp. Martin, take it away.
Thanks very much, Ty. And Mindsetters, please listen out because I'm going to be giving a clue to one of your answers for the challenge question, because what we're going to be doing right now is the question on financial ratios. So I've got a question here for you. And you'll see that we've been given here some financial statements from Wallman's Luggage. Wallman's Luggage being a business, a South African company that's involved in the sale of luggage. I'm sure you would have guessed that from the name of the business. It's a luggage business. And what they do is they sell luggage and they sell luggage accessories to the South African public. So right up here on the board, I've got a financial statement of this business. I've got a balance sheet over here. And then a little further down, I've got various other information, the CEO's report of this business. What we're going to be doing today is we're going to be looking at some of the questions that are going to require your use of some of the financial ratios. So listen out for the answer to the competition question, and let's have a look at the questions that we've been given. Okay, so your first question here says, the purpose of financial statements is to communicate. Let me just get my pen there. I seem to be having the same gremlins that we had previously. Communicate financial information to the various users of financial statements in order for them to be able to make decisions based on the financial information that's been given to them. So you'll see the question asks you, briefly list and provide a short description of 4 users of financial statements. Very, very important in a question like this. Read the instructions carefully. You're going to get asked to be given 4 financial users, and it also requires you to provide a short description of one of them. So who can you think of? Who do we need to be able to use the financial statements? Well, the first important one is usually going to be the management team of a business. Ty, you'll agree with me that if I don't know any financial information about my business, I'm not going to be able to make any decisions, right?
Exactly. You'd probably end up destroying your own business at that point.
Probably end up destroying your own business. So obviously the management of a business is going to need to know that information, and they will use the financial statements pretty much to make decisions. So obviously if you're doing a question like this in a final exam, you should flesh it out a little bit. You can see it's out of 6 marks. You should flesh it out and write in a fuller sentence. I'm just doing it in point form for you so that you get the basic idea. But pretty much, the management of a business is going to need to know what is going on in the business. They're going to need to know about the financial statements so that they are able to make good business decisions and guide the business towards the future. Another very important group of people that is going to need to know about the business is actually the government, and more particularly, SARS. Why do you think the government is going to need to know what the financial information of a business is? Well, very, very important for a company. You know that a company every year pays taxes. So if we don't know what income we've made, the government won't be able to tell whether we're paying the right amount of tax. So for taxation purposes, the government will need to know financial information. So I'll just put here for taxation purposes. Another financial user that would need to know financial information is obviously going to be the owners of a business. Now, in Matric, what you're generally dealing with is companies, and you should all know that companies have got a very special type of owner. Those are called shareholders. So our third answer here would be shareholders, also users of financial information, and they would need to know what profits they've made, they would need to know what returns they've made on their business, and they'd need to know whether or not it's a good investment. So shareholders would need to know for investment purposes what the financial information of a company is. Let me just extend the page a little bit to keep writing. Okay, you need to give four different financial users. The last one that I would say that's very important are the creditors of your business. So the creditors of a business are very, very important because when you are buying trading stock or when you're buying equipment or when you're buying vehicles from a creditor, that creditor is going to want to know whether or not you'll be able to pay them back so that they can determine how much credit they're going to give you. As a result, creditors would want to know the financial information of your business. So we can put here a sentence like this. We could say to determine how much credit to grant, or whether we should grant credit at all. There might be some other possible users that you can think of. Some of you perhaps would have thought of the debtors of a business, but since we are only asked to give 4 users in the question, we'd be wasting our time and we'd be wasting our energy writing another user, and perhaps you might not finish the paper if you write too much. So just always read the question very carefully and make sure you give exactly what the question wants you to do. All right, let's have a look at the next question. The next question is another theory question, and it says here that the financial statements were prepared according to GAAP. Now, these are the types of questions that you should really learn well. You should know your theory, because those are questions that if you've learned all the theory that you've been taught, you should be able to get excellent marks, and you should be able to put those marks into the bank, because these are marks that if you've known your theory, you should be able to answer without any problems. So GAAP, you just need to know, stands for Generally Accepted Accounting, and the P stands for practice. There are a number of principles that you should have been taught. In grade 10 you would have learned them, and they should have been revised in grade 11 and in grade 12 as well. Make sure you go over that work just so that you can name all of the different GAAP principles, because they often like to ask 1 or 2 theory questions about that. And you'll see that the second question also is a theory question. It says that in the director's report, reference is made to the term internal control. Once again, you need to think about what internal control is. Basic definition of internal control would simply be something like this. We would say that internal control is measures taken by a business to do one of 2 things. First of all, we want to make sure that our business does not commit fraud. Fraud is really not a great thing to happen to a business, because the business can lose money and there could be some theft or some other type of corruption happening in the business. So we would like to take some measures to prevent fraud. And the second very important thing about internal control is that a business wants to make sure that its assets are not being endangered. We want to make sure that our equipment is being utilized correctly, that our vehicles are being utilized correctly, that our trading stock is not damaged or broken or stolen. So what we could say is that an internal control method would be something that would be used to safeguard our physical assets. It would be something such as installing cameras in our storeroom to ensure that our stock isn't stolen. Or it would be something like installing trackers in our vehicles to make sure that our cars are not stolen, or any such measures like that. So to complete my sentence here, I'm going to say to prevent fraud or to safeguard the assets of a business. Once again, there's 2 marks in the bag right there if you can give a good sentence that explains what internal control is. And here's another theory question where it says, provide a description of the GAAP concept of a going concern. This is one of the different GAAP principles that you should know. Make sure you learn the definitions, make sure you understand that, because when you get a question like that, that's very, very easy marks. So a going concern simply means, yes, that's right, a going concern simply means that the business is assumed to continue for the foreseeable future. In other words, what this means is that we are going to make decisions as if the business is not going to close down anytime soon. We are going to make decisions as if our business is a going concern, as if it's going to extend into the near future. As a result, we would follow that GAAP principle. Make sure you learn some of the others. You'll remember there's a principle of historical cost, there's a principle of materiality, various others. Make sure you know them in time for your final exam. All right, let's get to the questions on the different ratios. And once again, these are very, very important. I can't overemphasize how important it is to know those ratios, learn them, learn the different formulas, just like you would learn the formulas for science and for mathematics. Vital to know those formulas very well. So here's the first one. The question is asking me to calculate the following ratios for both the 2008 and the 2009 years with regards to Wallman's Luggage Pty Limited. That, of course, is the business that we're dealing with. The first ratio that we've been asked to calculate is the current ratio. This one's very easy to remember as long as you know that the word current almost gives it away. The formula for the current ratio is as follows. Current assets in a ratio to current liabilities. Have you seen that ratio somewhere before, Ty?
I would say yes. I think because my mother used to be an accountant, so I think she still is. I shouldn't say used to, because she would kill me. But yes, I've seen in her books that she has a lot of these formulas together.
Right, and also bear in mind, mindsetters, that this question appears somewhere on your competition question. So let's have a look at the current assets to current liabilities. We are asked to calculate this ratio for 2 separate years, for 2008 as well as for 2009, with regards to Walman's luggage. Let's look at the information that we've been given. So over here, we're going to look in the section on current assets. Here are our current assets, and can you see that we've been given the 2008 figure, and we've been given, I beg your pardon, it's over here, we've been given the 2008 figure, and we've been given the 2009 figure. So we're going to calculate two ratios based on these figures, and we're also going to compare them to the current liabilities, which are given to us over here. So let's have a look at what the calculation involves. We're going to take the current assets from 2008, which is given to us as 2454370, 2454370. So the 2008 number, 2454370. I hope I got that right, Ty. Hope you've been paying attention as well. And we're going to do that as a ratio to the current liabilities, which are a little bit further down the page. There it is for 2008, 604230. Let's stick that in. We'll do it as a ratio to 604230. 230. Thank you very much.
See.
Sorry, now I've even
I'm with you.
haven't written it correctly. Thanks. 604230. And let's get the calculator up on the screen and just calculate that ratio right now. So we've got 2454370, and we'll put that as a ratio to 604230. Remember, mindsetters, when you're doing this, the ratio sign means that you must divide. So you're going to divide this by the right-hand side, which is 604230. And that gives me an answer of 4,06. That 4,06 means that the left-hand side of the ratio is 4,06 times larger than the right-hand side of the ratio. And please just bear in mind that when you're doing an activity like this, you should write the answer down as 4,06 to 1. There's a very common mistake that sometimes learners will do the ratio the wrong way around. So what they do is they divide the right-hand side by the left-hand side. Please do not do that in your final exam. Remember, the right-hand side of the ratio is always 1. Let's have a quick look at the 2009 ratio. So once again, we're going to need the numbers. We've got at the top there 2473550. Let's try and keep that in the short-term memory.
5570.
2473 550.
5570.
55. I just want to check that number. It's just 550. 2473 550. And we'll do that as a ratio to the current liabilities, which we can see here at the bottom are 909890. Let's stick that in. 909890. And once again, I'll pull the calculator up on the screen and let's have a look at the answer. So we're going to take the left-hand side of 2473550 and we will divide it by the right-hand side of 909890. and that will give us our current ratio of 2,71 to 1. So let's stick that answer on the screen here. I think I've also got some calculator problems here.
Okay, so I think while we're fixing that, we're going to make sure that these guys know what to do in terms of getting to that challenge question which you're going to attack at the end of the segment. So guys, make sure you get on the page, get on the events page, and make sure you post under the actual challenge question. Guys, I'm seeing it's filling up, so guys better get them in quick because we're going to close the competition very soon. So guys, make sure you keep posting, SMSing, and email us. But for now, we're going to take a quick ad break. See you soon. Welcome back, Mindsetters. Hope you had a nice little break. Now, guys, I've been telling you about this competition, and I hope you guys have been paying attention during the ad breaks because the question has been popping up. So, guys, you need to make sure that you keep posting because you know what? The competition closes in literally the next 4 minutes. At 4:15, competition is over. Finito. Done. Then we're going to be actually announcing the winners. So you literally have 4 minutes to enter the competition, get these awesome CD hampers and these books and this awesome t-shirt so you can match with us presenters, and you know we're all cool like that. So yeah. So guys, make sure you get on the page. Guys, here's the numbers again. Make sure you SMS 08344888810 and email win@learnextra.co.za. Guys, also post up on PepTex. It's free. Make sure you keep posting on the events page under the actual question. And guys, win. Come on, win. But for now, I'm actually going to shut up now so Martin can continue with the lesson. Martin, take it away.
Thanks very much, Ty. Before the calculator froze, I was just calculating the 2009 current ratio. So I'm just going to show you how to do that again. We'll take the 2473550 and we'll divide it by the right-hand side, which was the 909,890. And the answer came to 2,7 to 1. Usually, these should be rounded off to 1 decimal place, but you should just read the question very carefully and make sure that you don't make a mistake and round it off to 2 decimal places when it should be 3. Okay, so the answer was 2,71 to 1. So we can see from this current ratio, the current ratio has changed from 2008 and 2009. Try to think in the meantime what that indicates for the business. And I'll tell you a little bit later when we do one of the next questions. Now, listen carefully to the next one, because the next one might give you a clue here. Question 1.3 says, 1.3.2 asks you to calculate the acid test ratio. So the acid test ratio, once again, you're going to need to know your formulas. Know them very well. I'm sure I don't need to tell you what the formula is, since you've probably already sent your answers into the competition. But here we go. You're going to take current assets to current liabilities, but there's going to be one small and very important difference. You're not going to take all your current assets. You are going to, from current assets, subtract inventory. So your ratio here is going to involve you taking current assets, subtracting your inventory, and then putting that as a ratio to your current liabilities. That is the difference between your current ratio on the one hand and your acid test ratio on the other hand. Let's take a look at the numbers in this question. Here we've been given the current assets, and remember we used this number at the top here to calculate our current ratio. To calculate the acid test ratio, we are going to have to make sure that we subtract our inventories. This one's already been highlighted. So what we will do is we will subtract our inventories from the current assets at the top. Also, another possibility of calculating this acid test ratio, you could either take your current assets and subtract your inventories, or another possibility would be to add the other two together, your trade and other receivables plus your cash and cash equivalents. That would give you the same answer. But let's do it the way that's familiar in the ratio. We're going to take our current assets and subtract our inventories. So our current assets for 2008, remember once again, read the question carefully because it's asking you to calculate 2008 as well as 2009. In 2008, we had current assets of 2,454,370. So we've got 2,454,370,
70.
2,454,370. 370. Here's a hint, always take a sharp pen or a sharp pencil to your exam. From that, we are going to have to subtract our inventory, and we've been given inventory as well. Our inventory was 1346,500. So we'll stick here on this side, 1346,500. The rest of the ratio is going to be exactly the same because we're going to put it to our current liabilities, which we actually had in the previous question. For 2008, here it was, 604,230. So I'll take that number and put it here. 604,230. So once again, let's bring our calculator up onto the screen and do the calculation. I'm going to take the 2454,370, and now first I'm going to subtract from this the 1346,500. 1346,500. Please make sure that at this point you press equals on your calculator to get what the current assets are after you've subtracted the inventory from it. It might also sometimes be a good idea to write this answer over here so that you have it on the page. Because remember, you're going to get given some marks for calculations, so if you've done your calculation correctly, you'll get some method marks even if your answer turns out not to be right. Okay, so let's do the calculation. We are going to take that answer that I have, the 1107870, and we're going to divide it by the 604,230, and that will give me my answer of 1,83. So once again, we'll take that 1,83, and it will be 1,83 to 1. 1,83 to 1. That is my acid test ratio for the year 2008. If I have to do it for 2009, once again, it will be the same method. So I'm going to take my current assets for the year, which in this case were the 2473,550. I'll write it down, 2473,550. And from that, I'm going to have to subtract, once again, my inventory for the year, which was 1354,300. 1354,300. That answer I'm going to put as a ratio to my current liabilities. You know where to find them. They're at the bottom of the page here. 909,890 were my current liabilities for the year. So let's put them there. 909,890. If we do the calculation, we'll get the answer 247,550 minus 1354,300. Once again, press equals first, because if you don't press equals, you're going to end up with the wrong answer because your calculator is going to divide only this negative sign by the 909,890, and you won't get the right answer. Once you've done that, you're going to divide it by, once again, I've got a problem with the calculator, I'm sorry. I'm going to divide this by the 909,890, and the answer comes to 1,23 to 1. Let's put that as our answer, 1,23 to 1. $1,23 to 1 appears over here. So by now, you should have earned your 2 marks for calculating the acid test ratio for the 2 separate years. Now, knowing the calculation is one thing, but you must also be prepared to comment on your answer. So let's have a look at the next question, where the next question asks you to do exactly that. The question asks you, comment on the liquidity of this business. Now remember, in Matric you need to know your 2 liquidity ratios. Those are the current ratio and the acid test ratio. We have calculated the liquidity for the business based on our answers in the previous 2 questions. So the current ratio we got the answer here. In 2009, it was 2,71 to 1, but in 2008, it was 4,06 to 1. Remember that your interpretation of the current ratio always involves comparing your current liabilities to your current assets. And in 2008, this business had 4,06 current assets for every one current liability. What that meant is that it was able to pay off its current liabilities 4,06 times over with the current assets that it had. But in 2009, this declined slightly to 2,71 to 1. So for every 1 rand worth of current liabilities it only had 2.71 rand worth of current assets that could be used to pay. So the business is becoming less liquid from 2008 to 2009. The asset test ratio actually tells us a similar story. So if we look at this, we can see that in 2008, the business had an asset test ratio of 1,83 to 1, and in 2009, it was only 1,23 to 1. This meant that the business was becoming, again, less liquid, which meant that it would have, could possibly encounter problems in paying off its short-term liabilities. What is important to know, though, is that for both of these ratios, we have got industry norms. And that's, again, something that you have to learn and know quite well. The norm for the current ratio is usually given as 2 to 1. So, the current ratio's norm, if it is 2 to 1, we would usually say that the business is liquid. So any number of 2 to 1 and above means that we've got a business with good liquidity. In our example, the current ratio was 2,71 to 1 in 2009. So we could conclude that the business is relatively liquid and should not have any trouble meeting its short-term liabilities or its short-term obligations. The asset test ratio, you should know as well that the norm for the asset test ratio is usually 1 to 1. So I'll put that there. And we can see from this business that its asset test ratio did meet the norm of 1 to 1. It was 1,23 to 1. So what that meant that if we do not count the stock of the business had 1,23 current assets to pay for every one current liability that it has. As a result, this business is quite liquid and shouldn't have any difficulties in paying off its short-term debts. So a good answer would be that compared to the norms, the business is quite liquid. This business is liquid. And you could also perhaps answer that the liquidity ratios are declining from previous years, which means that in the future, the business would have to make sure that it continues gaining enough current assets in order to pay off its current liabilities. I'm sure you're all waiting for the answer to the question that's coming up now. I'm just going to do one last question here. This is another type of theory question where it says, why is the asset test ratio an applicable ratio for Woolman's luggage, but not for a company like Standard Bank? Good question. What's the answer to that question? Well, the main thing is that Woolman's luggage is a business that sells luggage, whereas Standard Bank doesn't actually sell a product. Banks are service providers. They keep your money, and as a result, they provide a service for you. But they don't actually physically sell you anything. So if you look at the current, the asset test ratio, the formula is current assets minus inventory. And we put that as a ratio to current liabilities. But what you should be able to see is that a business like Standard Bank has got no inventory because it doesn't actually sell anything. All it does is provide us with financial services. So if we had to subtract something here, if we had to subtract the inventory of Standard Bank, we would actually end up subtracting 0 because Standard Bank doesn't keep industry. Tai, I don't think you've ever gone into a bank and bought anything.
No, they tried to sell me a new account though, but that was about it.
That was about it. And once again, even though they do sell you a new account, that is going to be a service that they've provided you. You can't actually physically see the account. Like you can see this pen here, it would be a product and would be part of inventory. So remember, when you are calculating the asset test ratio, it is only going to be relevant and applicable to a business that actually sells some type of inventory. Should I give the answer to the question now, Ty? Has our time run out?
I think we could tackle it just now. I don't know if you want to comment a little bit more about the question that you're on now.
Okay, well, what we'll do when we're dealing with current assets and inventory, just make sure that you know the norms very, very well, and make sure that you're able to give a comment. Remember, there is sometimes a business that has got a large amount of inventory. And if a business has got a large amount of inventory, then it might have difficulty meeting its short-term liabilities. So for example, let's say that the current ratio is 5:1, but the asset test ratio is only 2:1. Actually, we should make it 0,2:1 to illustrate the difference even more. So, if we take away the inventory from the business, suddenly we've got an asset test ratio that's actually quite low. And if we were dealing with inventory included in our ratio, we get an answer of 5:1, which means that the business is able to cover its liabilities 5 times over. For every 1 rand that it owes, it's got 5 rands worth of current assets, which obviously includes your inventory. However, when we're looking at the asset test ratio, we've got only 0,2:1, which means that the cash and cash equivalents and the trade and other receivables of the business are only enough to pay 20 cents for every 1 rand that that business owes. So when that happens, make sure that your answer includes that and says that this business is overstocked because it's carrying too much inventory.
So Martin, I think we've got a little bit more time left just for us to tackle the challenge question. Do you think we can do that?
We sure can. Let's have a look at the challenge question. Here it is. We asked you what was the asset test ratio's formula. A gave you current assets minus inventory to current liabilities. B was just current assets to current liabilities. And C was total assets to total liabilities. All of those ratios should look familiar to you if you have done your homework and if you are ready for the final exam. But you need to know what each of those 3 ratios represents. Total assets to total liabilities, that is not an indicator of the asset test ratio. That, in fact, is the solvency ratio. So I'm afraid if you said C, that's the wrong answer. You may remember previously I dealt with the answer to B. Current assets to current liabilities. Very, very, very close to being the right answer, but there's one thing missing. This is actually the current ratio. Because to get from the current ratio to the asset test ratio, the very important thing is that we are going to have to subtract our inventory, like I did in the previous question. So current assets minus inventory to current liabilities gives you the asset test ratio, and that's the right answer.
All right. So yes, I think we actually have a winner. Her name is Tabile Radebe. Congratulations, you're going to get these hampers sent to you. I'm excited for you. You're excited. I'm sure you are. Make sure this is not a once-off thing. You guys are going to have to stay on the page and keep posting, keep posting, keep posting. But congratulations. We are going to be sending this stuff to you, and you're going to get this awesome t-shirt. Woo! And then you're also going to get these awesome winter books that are going to come and help you for any of the exams that are coming up. And congratulations. And I want to wish you the best of luck for your upcoming exams. So from us, we're going to say we had a blast. Martin, you had a blast?
I had a blast.
All right. So guys, make sure you keep on the page and keep chatting to each other. But for me, I'm going to say cheers and next time.